So, what is the engine that powers pretty much every great idea in our modern world? Well, the answer might surprise you. Today, we're going to pull back the curtain on one of the most powerful and, let's be honest, most misunderstood concepts out there, the stock market.
And you can see why, right? At first glance, it just looks like total chaos, this digital storm of flashing numbers that feels, completely overwhelming.
But here's the secret. Underneath all that noise is a surprisingly organized system. It's an engine that has fueled almost every major innovation you can think of. And today, we're going to break down exactly how that engine works.
To really get it, we first have to look past the chaos and understand the basic problem the market was actually created to solve in the first place. It all boils down to a really simple question. Just imagine a brilliant company with a world-changing idea. Now, to make that idea a reality, to build the factories, hire the engineers, reach customers, it needs fuel. And in the business world, that fuel is capital. Plain and simple. It's money.
So, where does that fuel come from? Well, that question leads us right to the very birth of what we call a stock.
A growing company, it basically has two choices to raise cash. They can go to a bank, take on a bunch of debt that they've got to pay back with interest, or they can do something way more collaborative. They can invite the public, people like you and me, to become part owners and share in the company's future success. And this huge step, this big moment, is called an initial public offering, or IPO for short. It's the moment a private company decides to go public, selling off tiny little pieces of itself, we call them shares, to anyone who wants to invest in its future.
A really good way to think about it is like the company's graduation day. It's a huge milestone, right? It's a signal to the world that it's ready to play in the big leagues. Okay, so once a company goes public, what does it actually mean for you? Well, this is where you become part of the story, as an owner. Think about this. If you buy just one single share of a company that has 1 million shares out there, you're not just a spectator anymore. You literally own 1/1,000,000th of that entire corporation. That's a real, tangible piece of the business. And that creates this massive shift in your relationship with that company. You've gone from just being a customer who buys their stuff to being a shareholder, an actual owner of the very business that makes the things you use. So what do you own? Well, you own a tiny fraction of everything. That includes their office buildings, their valuable patents, a claim on all the profits they might make in the future, and even the stuff you can't touch, like their brand and their competitive edge.
So why would you want to own a piece of a business? Well, let's talk about the rewards of that ownership. Let's get to the good stuff. As an owner, you can get rewarded in two main ways. The first is called capital appreciation. Basically, if the company does well, more people want to own it, and that drives the price of your share up. You can then sell it for a profit. Simple. The second way is dividends. This is cool. It's when the company takes a piece of its profits and shares it directly with you, usually as a cash payment, kind of like a thank you for being an owner. And those dividends, they are incredibly powerful. They're really the foundation of what a lot of people call passive income. That's money you earn just from what you own, not from the work you do. Okay, so now that we've got the mechanics down, let's talk about what might be the most important piece of this whole puzzle: adopting an investor's mindset.
You see, there is a world of difference between being a trader and being an investor. A trader is obsessed with today's price, hoping and praying it'll go up by tomorrow. It's basically a short-term gamble. An investor, on the other hand, ignores all that daily noise. They focus on the actual business and its potential to grow over the long haul. An investor starts by asking some really fundamental questions. First up, is this company providing real value to people? Are they actually making something the world wants or needs?
Next question, is the company well managed? Is the leadership team smart? Are they trustworthy? Do they have a clear vision for where they're going?
And finally, the big one, the ultimate question. Based on all that, do I honestly believe this business will be stronger and more valuable 5, maybe even 10 years from now? When you start to look at it through that lens, the stock market completely changes. It stops being a casino, a lottery. It becomes what it truly is, a marketplace for human progress, where all of us together decide which ideas get the fuel they need to grow. And that leaves us with one final, powerful thought. Every single dollar you invest is a vote for a certain kind of future. So the real question isn't just how can I make money, it's what ideas, what innovations, and what companies am I choosing to help build? What kind of future are you funding?